Issue number one is the job market, Brian. Issue two, the tax cuts, and by extension, the election. Sorry to come back to that, but I have to. Most important question facing the Fed right now, just how hot is the job market? Come on, anybody going to ask me, Steve?
How hot is it?
Hot, hot, hot. And one way to answer that, thank you very much, the current broader measure of slack in the job market. Now, this includes what? The marginally attached to the workforce. It includes the unemployed, and it includes those working part-time for economic reasons. That's called the U6, just 7.4%, 3 points below the longer run average, which you can see right there. So let's break it down. Let's take percentages, turn them into millions. 4.5 million part-time for economic reasons, 6.1 unemployed, 1.5 million marginally attached to the workforce. That's 12.1 million, the lowest since 2006, when there were obviously fewer bodies in the labor force. And by the way, back then, the Fed funds rate was 5.25%. So if you don't think the Fed thinks it's running hot right now, well, you got another thing coming to you. Goldman Sachs with I think, an interesting comment this week. It says, we expect the unemployment rate to resume its decline in coming months, ultimately to 3% by early 2020. This is probably well below the level consistent with the Fed's inflation target. Labor market tightness is moving to levels rarely seen in post-war history at the national level. So the economy really needs to slow to avoid a dangerous heating. Now, I don't think folks on the Fed have a dog in this fight or a horse in this race, or are there other ones we could do like that? whatever it is.
I'm going through the zoo. I can't think of
I do think they would worry about another round of tax cuts. That is, more stimulus into an already hot economy. I think that would be. Who
are all these people not working?
So there's 95 or 96. Guys, there may be a chart back there called not in the labor force. And this number continues to go up. You can see there in jagged motion, but it continues to rise despite the hot economy. Why is that? Because there are retirees in there. There are kids in there. There are people going to college. There are people, women and men, who decide not to work for various reasons. Maybe they have a spouse who makes a lot of money. Maybe they have a spouse who they wish made more money. That's another story we can talk about in another time. But that number is going to keep going up. The effect of the hot job market is that number is perhaps not going up as much as it otherwise might, given the retirement of the baby boomers. Now, we can keep some baby boomers by retiring by, I don't know, more lighting in the workforce, bigger screens, more money. Actually, you laugh at that. That's really some techniques they're using to keep
lighting, bigger screens.
But they are still going to be moving more people into a cohort with a much lower participation rate. So
I did notice. I actually looked the other day. For some reason, I was researching a story. The number of people on disability has also declined.
It's declined, and
it peaked out at the peak of the recession, and then it's come down since then.
We find that there are bodies out there. The question is, are there enough bodies to keep us going at 200,000? I think the Fed would like to see this slow to more of a trend rate of like 100,000, which is what he thinks is a better, more steady state.